Tune into ESG Matters with Risk Insights, where we explore ESG with impact. Welcome back to ESG Matters with Risk Insights. I'm Anushka Bogdanov, and today I want to explore a question that has been on everyone's mind. Why is the Global West, the same region that once drove the world's sustainability agenda, now seemingly pulling back? Are we watching the end of ESG as we know it, or the birth of something new? And beneath all the noise, what does this mean for Africa, for our economies, and how power itself is being redistributed? Let's start with the basics, because in 2025, we still hear people ask, is climate change real? The short answer is yes, absolutely. The data is overwhelming. 2024 was officially the hottest year ever recorded. The World Meteorological Organization found global temperatures were about 1.55 degrees above pre-industrial levels. Oceans hit record high heat content. Ice caps continued shrinking, and extreme weather disrupted economies, from floods in Europe to fires in Canada and droughts in the Horn of Africa. The IPCC reminds us that this isn't just environmental, it's economic. Every fraction of a degree now reshapes agriculture, insurance, migration, and trade. So the science isn't up for debate. The question is, why are we debating the response? In the last 2 years, something changed. The United States, once a loud advocate of corporate sustainability, started pulling back. The Securities Exchange Commission's long-awaited climate risk disclosure rule was first challenged in court and then shelved after political pressure. Dozens of US states introduced anti-ESG laws, preventing pension funds from even considering environmental or social risks. The United Kingdom slowed its net zero targets, delaying the petrol car ban from 2030 to 2035. And even global investors began slowly rebranding ESG funds as sustainability or impact products to avoid culture war headlines. So what happened? ESG has become politicized. In the US, it was labeled woke capitalism. In parts of Europe, it was criticized for being bureaucratic and expensive. Yet the irony is, while politicians argue, climate risks don't wait. Investors still price risk, markets still demand data, only the rhetoric has changed. Here's the twist. While the politics looks messy, regulations keep marching forward. In Europe, the Corporate Sustainability Reporting Directive, or CSRD, is now law. From this year, thousands of companies must disclose environmental and social data with the same rigor as financials. The Carbon Border Adjustment Mechanism, CBAM, is already reshaping trade, putting a carbon price on imports like steel, cement, and aluminium. And globally, the ISSB, or the International Sustainability Standards Board, has been adopted or aligned in more than 20 countries, including Japan, Canada, Brazil, and even Nigeria. So ESG isn't dying, it's evolving from voluntary virtue to mandatory economics. Let's talk winners and losers. In the near term, countries that control critical minerals like copper, lithium, cobalt, platinum are sitting on a new oil of the green economy. Southern Africa, Latin America, Indonesia, these regions have leverage if they can ensure good governance and local beneficiation. And now the losers. Economies that depend on carbon-intensive exports and ignore transition plans. Under CBAM, a ton of carbon now carries a price tag. If your factory or your mine can't prove emission data, you pay more. And companies in states that restrict ESG risk management are finding that borrowing costs are actually rising. Politics has a price, and markets always find it. Now about the word woke. ESG has become a symbol of a larger cultural battle. Some call it a Trojan horse for ideology. Others saw it as the conscience of capitalism. But strip away the slogans. ESG is simply risk intelligence. The E tells you your physical and transition exposure. The S tells you whether your workforce, communities, and supply chains are resilient. And the G determines whether you make decisions with accountability. That's not politics, that's strategy. The problem isn't the concept, it's how it's being branded. Some say we are witnessing the decline of the global north. I wouldn't go that far. What we are seeing is a redistribution of economic gravity. Power is moving towards countries that control resources, manufacturing, and energy transition inputs. Governance, meanwhile, has become selective, often filtered through race, gender, class, and politics. When governance bodies impose standards selectively, trust erodes. Yet, for the first time in decades, the South, and especially Africa, has a seat at the table. The question is, will we use it to build or just react? Africa's advantage lies in three words: data, disclosure, and discipline. We are not burdened by legacy infrastructure. We can build ESG systems natively, aligned to ISSB and CSRD from day one. Our emissions per capita are amongst the lowest in the world, yet we hold vast reserves of green minerals, solar potential, and youth talent. Through tools like ESG GPS, we have shown that African issuers can match and even surpass global disclosure benchmarks. That gives Africa leverage with DFIs, investors, and policymakers who are recalibrating portfolios towards credible and transparent data. The world of economics is being reshaped through ESG, and the winners will be those who treat it as a lens on value and not a label for virtue. Let's touch on governance, the G that binds us all together. Around the world, we still see decision-making dominated by the same demographics. Boardrooms talk about diversity, but act defensively. Regulators apply rules differently depending on who you are, where you come from, and what network you belong to. Governance is still often filtered through race, gender, and economics. But inclusive governance isn't charity, it's risk mitigation. When leadership reflects the society it serves, blind spots close. When data reflects real operation, trust expands. That's what will make or break ESG in this next decade. So is ESG dying? No. It's being stripped of its slogans and hardened into the architecture of the global economy. We are entering the age of ESG accountability, where capital follows credibility. The global north isn't collapsing. It's being challenged to share the table. And the global south, especially Africa, has a once-in-a-century chance to define what responsible growth truly means. The question for each of us, whether in business, government, or academia, is simple. Will we lead with courage or wait for permission? But we must be honest. Africa is now flooded with self-proclaimed ESG experts, individuals who adopt the title but not the discipline. ESG is not a badge. It's a behavioral shift. It demands evidence and not eloquence. The difference between a PowerPoint and a transformation is data integrity, measurable outcomes, and governance courage. But ESG won't succeed through checklists or imported templates. It will succeed when every company on this continent treats governance as the heartbeat of value, data as its language, and integrity as its currency. Thank you for listening to ESG Matters with Risk Insights. I hope you enjoyed this segment and will continue supporting it. If today's conversation resonated, share it, subscribe, and join the dialogue on LinkedIn. Until next time, keep challenging narratives, keep building data integrity, and keep believing that Africa's story in ESG is just the beginning.